What is going on, guys? Good afternoon. It's your favorite mortgage lender, Abdel Kwame. Actually, coming at you guys live on a Tuesday. We normally do these on Mondays. Got a little super tied up yesterday. We had a lot of different events that were going on, which are super successful. Want to kind of go over exactly what the expectation was for the market last week. What's the expectation this week? A couple different updates in regards to where interest rates are slowly starting to drop. I think we have finally truly reached the point of that climax coming right in time around the time as we're heading into toward the end of the summer, simultaneously heading into some of the different various changes that are coming up with the elections and all that fun stuff. So we're going to first start off most importantly with the number one thing, which is obviously inflation. We now know that we've reached the top of inflation. Consumers are spending less money. They are literally just simply tapped out. We're starting to see now a significant downward trend when we start to look at interest rates. Okay. And if we kind of take a step back, you guys will kind of see literally over the last, I would say, uh, month, we've been on that downward trend where we're now ticking anywhere from really close to 5 months lows, and we're staying consistently at those 5 month lows numbers, which is awesome. The consistency of the numbers that are kind of continuously coming into place is allowing many consumers the opportunities to truly just be able to qualify, truly be able to at least borrow the expectations in regards to what the affordability is, no longer running into numerous instances of what we want to do, right? So when we talk about inflation, we're kind of going over again the CPI report, Consumer Price Index. We got updates last Friday, and we're seeing that once again, headline inflation is on a downward trend. We're now at a just 3% headline inflation when we look at the year over year numbers. Again, the bottom line is we know that the Federal Reserve increased their interest rate hikes 11 times over the last March of 2022 till now. They have obviously paused, and now the consensus is that we are potentially almost at a 92.4% chance that they are more than likely going to be cutting interest rates, which is awesome. We're going to see our first potential interest rate cuts in September, and then we will potentially see maybe two more cuts before the end of the year, with a potential lock-in of 7 interest rate cuts towards the end of next year. This is going to increase the buying power for so many different consumers out there. I'm not necessarily a fan of this. I truly think interest rates should remain a little sticky over the next few months. But you know what? I think the Fed also has a mandate to make sure that dual mandate with employment and inflation is balanced. We're really reaching that peak, right? We're starting to see also Jerome Powell, again, like I actually just said, having that dual mandate, right? Going over, listen, we need to make sure that inflation is simultaneously cooling, surely moving towards that 2%. Before they were firm at it being at that significant 2%. Now they've actually changed their stance, saying it should be moving towards that 2%, which is, again, the risk that we need to make when we're also facing, obviously, the economy of the market and not too many of the people losing their jobs. Now we're starting to see still continuing jobless claims, although a slight decline. It's still at one of the highest levels that it's been in the last recent years, which again is showing that if you lose your job, you're having a hard time going back and getting it, right? One of the things that we're looking out for today, we saw retail sales numbers came a little higher than expectations, which was kind of expected, but kind of shifted a little bit of the stance. We saw a little bit of consumer sentiment actually was on the lower side. Home builder sentiment, again, we know the cost of things is still relatively a little higher. Retail sales numbers, again, that came out, and really not much that's going on aside from that in terms of market update. We'll get later on updates in terms of the PCE report towards the end of this month, personal consumption expenditure report, and truly see some of the expectations when it comes to the market and what some of the things that we're doing. But these are the things that we really need to look out for, okay? At one point, we were literally almost as high as just past 7% and change, and that has significantly turned into a downward trend. You guys can literally see we have been moving towards that downward trend, really flip-flopping, but we are at one of the lowest levels we've been truly within the last 5 months. If we go to February 1st, 2024, we can literally kind of see exactly where we kind of were around the February time is truly where we're at, which is awesome because that's going to open again the affordability window. But we truly have to be very mindful to a lot of our clients who are simultaneously out there who are looking for homes and looking for qualifications, right? We're going to compete against multiple offers. This should potentially open up the window simultaneously to a lot of different home sellers placing homes on the market, which should potentially open, obviously, affordability within the market. Not too much going on aside from that, so I'll keep you guys updated. I hope everybody is having a blessed summer, and I'll talk to you guys soon. Have a blessed day.